Hi dear students, we have already covered the area calculation of cash from operation. Now we are discussing some of the additional problems which are related to calculation of cash from operation. Okay, this is one question. From the following information, calculate cash from operation using direct method. We are given with net sales, cash and credit, profit on sale of asset, less cost, then add outstanding, less administration, selling expense, primary expense, return of provision for tax, etc. Additionally, we are given with some information, the opening values and closing values of debtors, creditors, outstanding wages, prepaid administration expenses. Okay, we are given with the values on January and December. We are asked with direct method. What are the items we will use in direct method? In direct method, we will use mainly cash receipt from operation, that is cash sales, cash received from debtors. Here cash sales is there, cash sales 30,000 is there. Cash received from debtors is not here. At the same time, we have given with the credit sales, then opening value of debtors, closing value of debtors. How to find cash received from debtors? Here we have to prepare a sundry debtors account with opening balance, closing balance and credit sales. Then we will get a cash received from debtors. Then on receipt side there is one more item, profit on sale of assets. This is a non-operating item, so should not be considered under direct method. Then cost of sales, purchase. Here we will take a cash purchase. Then credit purchase is not taken, but at the same time we will consider cash paid to suppliers or creditors. How it is calculated? Consider credit purchase, then sundry creditors at the beginning, sundry creditors at the end. So we have to prepare another account, creditors account. Then wages paid is taken. Outstanding expense should not be considered. Then administration expense is taken. But in the adjustment there is outstanding wages and prepaid outstanding administration expenses at the beginning and end. So simply the administration expense 20,000 should not be taken. It is the amount debited. So amount to be shown is calculated by adjusting opening and closing adjustments. Then selling expense is taken. Then preliminary expenses written off will not be taken. It is a non-cash item. Provision for tax, it is a non-cash item. It should not be considered. So let us start with first one is preparation of sundry debtors account. In sundry debtors account we consider the opening balance of debtors and closing balance of debtors. And we are also given with the credit sales. It is debited because credit sales will increase the value of debtors. Okay, so it is debited with the item showing opening balance. Then this account is balanced. Balance will be 90,000. This 90,000 is considered as cash received from debtors. Okay. Nextly, we have to find the value of cash payment to suppliers or creditors. It can be calculated using another account called sundry creditors account. Here opening balance is credited because sundry creditors is a liability. So opening balance is shown here, closing balance is shown here. Then another item given in the question is credit sales. Credit sales is credited because it will increase the value of opening debtors. Okay, so the creditors value will be increased with purchase, so it is credited with the opening balance. Then the balance will be shown. This balance is taken as cash paid to creditors or suppliers. Okay, then Another item is direct expense, cash operating expenses. Here in the question, wages paid is 6,000, add outstanding 2,000, total 8,000. So here simply we are considering cash expenses paid, so we can take only 6,000. That is a direct method. Or if this is not given, then we will take amount debited 8,000 less closing outstanding 2,000, the balance will be 6,000. So the amount considered is cash wages paid 6,000. Next one is cash administration expenses paid. We have given the amount debited in profit or loss account as 20,000. So it is taken. Then prepaid at end is given in the question, it is added. Prepaid at beginning is given in the question, it is deducted. The balance cash expenses, administrative expenses paid is 20,500. Okay, then we can find cash from operation. Cash from operation is calculated here. Then cash sales, cash received from debtors, total receipts. Then less cash payments, cash purchase, cash paid to suppliers or creditors, cash wages, cash administration expense, cash selling expense. All these payments are deducted. The balance 31,500 will be taken as cash from operation. Okay, then let us examine another question. From the following information, calculate cash from operation by direct method. We are given with a trading and profit or loss account. Here the items given on the credit side are credit sales. Here you have to notice that if the word credit is not given, we have to assume that all the sales are on credit. Okay, then credit sales, closing stock. Then on the debit side we have opening stock, credit purchase, gross profit, salary, rent, depreciation, etc. Okay, we have given with the opening and closing values of debtors, creditors, outstanding salary, prepaid rent. Okay, how to calculate cash from operation? Firstly, we have to find cash receipts. What are the cash receipts generally coming in this type of problem? One is cash sales, but here in this problem all the sales is credit, so there is no cash sales. Second receipt is cash received from debtors. How to calculate cash received from debtors? Here we have given with the opening balance of debtors, closing balance of debtors, and also credit sales. So based on this, you find the value, you prepare debtors account and find the value of cash receipt from debtors. Opening balance 40,000 is debited. It is an asset, so the balance is debited. Closing balance is credited 56,000. Next one is credit sales. Credit sales will increase the value of debtors, so it is to be shown along with the opening value, that is 4,80,000. So these are the three items shown: 4,80,000 credit sales, opening and closing value. So in debit side the total will be 4,80,000 plus 5,50,000. Okay, 5,50,000 is here. From this we deduct the value of 56,000 and the balance here will be 470, then 464. Okay, 4,64,000, 470, 520. Okay, 4,64,000 will be considered as cash received from debtors. Likewise, we are given with the opening value and closing value of creditors, and also credit purchase is here. So we prepare a creditors account. Opening value 28,000 is credited and 20,000 closing value is debited, and credit purchase 3 lakh, it is also credited, and we find the difference. The difference is taken as cash paid to creditors, another item. Then next, what are the other items of expenses? Opening stock will not be considered, it is already taken. Gross profit is not considered. Salary, this is another item. Okay, but you have to notice that there is outstanding and outstanding values, outstanding salary in opening values and closing values. So we consider salary debited is 40,000. Then outstanding salary, we know the opening value is added plus 4,000. The closing value is deducted 6,000. So we take 38,000 as salary paid. Another item is rent. Here also there is prepaid rent. Prepaid rent 4,000 and 6,000 is given. So we have to adjust these items. Depreciation will not be considered. Then we can find cash from operation under direct method. Here sundry debtors account is prepared and the balance is cash received, that is 4,64,000. Next is creditors account. The balance cash paid is 3,08,000. Salary paid we have calculated is 38,000. Cash rent paid is 22,000. That is prepaid at end is added, prepaid at beginning is deducted. Then we prepaid cash from operation. We have calculated cash from operation. Cash sales is not there. Only cash received from debtors is there. Total is 4,64,000. Cash payment includes, there is no cash purchase, but there is cash paid to creditors, cash salary, cash rent. Okay, total is shown and the balance cash from operation here is 96,000. Okay. Now let us discuss another example. Calculate cash from operating activities from the following details. We are given with profit or loss account balance, opening value and closing value. Then sundry debtors, bills receivable, general reserve, wages outstanding, salary prepaid, goodwill. We have asked with the calculate cash from operation. The method is not given, direct or indirect method. What is the method used here? If it is a direct method, there will be cash sales, cash received from debtors, cash expenses, etc. It is not given here. But at the same time, for indirect method, we will use profit or loss for the year, etc. Here we have given profit or loss account balance, etc. So the method used is indirect method. How to calculate the problem? First we know we will start with the net profit for the year. What is the net profit for the year? Here the balance given 60,000 is the balance at 2010. 65,000 is the balance on 2011. Actually, what is the profit for the year? It is not 65,000. 65,000 is the balance. 60,000 is the opening balance. So the actual amount of profit will be only the difference. Okay, so net profit for the year is 5,000. That is, the profit made during the year is only 5,000. So we took this item. Sundry debtors is a current asset. It is taken for adjusting increase or decrease in current assets and current liabilities at the next stage. So this is sundry debtors is an asset. Bills receivable is a current asset. So the next item is general reserve. For general reserve, we have given with the opening balance and closing balance. Opening balance is 172. Closing balance is 2,07,000. What is the meaning of that? In 2010 it is only 1,72,000. In 2011 it is 2,07,000. What is the meaning of that? We find the difference. It is the amount newly transferred to general reserve. So 2,07,000 minus 1,72,000. 35,000. Okay. 35,000. 28 plus 7. 35,000. What is the meaning of that? It is the 35,000 is the amount transferred to general reserve. This is the debit item. So non-cash, non-operating item debited to profit or loss account is added. So 35,000 is added. Next, wages outstanding. It is a current item, current liability. Salary prepaid, it is a current item, it is a current asset, it is adjusted in the next stage. Then another item is goodwill. Here goodwill, first year it is 70,000, second year it is 60,000. What is the meaning of that? There is a decrease of 10,000, that is goodwill written off is 10,000. When goodwill is written off, it is debited. So the non-cash non-operating item debited is 10,000, that is goodwill written off. So we total all these items, 35,000 plus 5, 40, 40 plus 10, 50. So we have got to the total 50. And there is no non-cash non-operating income here. So the operating profit before working capital changes is 50,000. Okay, so operating profit before working capital changes is 50,000. Next, we have to consider changes in current assets and current liabilities. One current asset is debtors. What is the peculiarity of debtors? Whether it is increase or decrease? It is decreased. So when it is decreased, it is to be added. Another current asset is bills receivable. Bills receivable opening value is 40,000, closing value is 81,000, that is, it is a decrease. So when current asset is decreased, it is to be when it is increased, it is to be deducted. Then wages outstanding is a liability, current liability. Wages outstanding is decreased here, so it is to be deducted. Salary prepaid is a current asset. There is increase of current asset, so it is to be deducted. So we have to adjust these items also. For example, with 50,000 debtors, there is a decrease of 85, 48, okay, 37,000. Okay, 37,000 is to be added. Then these items are to be deducted. 40 minus 81, 31,000 is 41,000 is to be deducted. Then next 26 minus 8, okay, that is 18,000 is to be deducted. Then 8 and 10, 2,000 is to be deducted. This is how we will calculate cash from operation. Here this is the solution. Profit for the year 65 minus 60, that is 5,000 is profit for the year. Transfer to general reserve 35, goodwill return of 10,000, total 45,000. The profit working capital before cash from operation before working capital changes is 50,000. Then we will add decrease in debtors, increase in bills receivable is deducted, increase in prepaid salary is deducted, decrease in wages outstanding is deducted. Total from 87 we will deduct 61, balance 26,000 will be considered as cash from operation. Okay, this is regarding additional problems. Okay, I think you are well aware of this. Okay, thank you.